Welcome back to the exchange. It's time to reveal today's mystery chart. It's Five Below. I'm going to give a congrats to Trade CNBC and to Nicholas Brown for guessing this. The discount retailer climbing 4% today after Loop Capital upgraded the name to a buy rating. Shares are already up about 150% since their recent low in April, but Loop sees another 20% upside from here. The firm says the market is vastly underestimating its near-term earnings power and that Five Below's pricing power can help offset tariffs. So joining me now is the analyst behind that call, Anthony Chukumba. Anthony, it's great to have you on, and let's start right there. Why do you think that's the case? Why do you think pricing power can offset impact of tariffs?
So Five Below did price adjustments on 15% of their items over the last few months. Now, they've been kind of keeping it on the down low, as the kids say, because they don't want to piss off, the folks in the White House. But regardless, those have really been, for the vast majority, price increases, right? And basically what they have found was that they haven't gotten a lot of pushback from consumers. And so that's going to drive higher comp store sales, but it's also going to allow them to offset a lot of those Chinese tariffs.
Yeah. What does it mean? What's the read-through here for some of those Chinese importers? I think about the Sheins and some of the other, sort of fast commerce names that are also having to take price increases. The fact that they're maybe hit harder, does that help a Five Below?
Well, yeah, I mean, look, the fact that the de minimis exemption has sort of gone away, I mean, that's definitely been a benefit for Five Below. But I want to be very clear, because I think that there was a misperception that Five Below was really hurt by the Temu and Sheins of the world. I don't really think that's what it was. I think their merchandising just got very, very stagnant, and that has completely reversed under their fairly new CEO, Winnie Park. So I think it's much more about better merchandising and the price increases than it has been about Temu and Shein.
It sounds like you think their new CEO is doing a good job. What's the strategy longer term that you expect?
So I think that it's kind of getting back to what they were doing before, right? Just having really, really sharp merchandising, exploiting trends, exploiting fads, exploiting, popular licensed products. So right now that's Lilo and Stitch. Earlier this year, it was a Minecraft movie. And then it's just going to be to continue to open new stores. I mean, there's still a lot of white space in the U.S., particularly in the Pacific Northwest.
And we talk a lot about, especially looking at retail, about the read-through to the consumer, the health of the consumer. Does the health of the consumer actually matter for a company like Five Below?
I think that it does on the margin. I mean, I would say that about just about any retailer. Now, one thing to think about with Five Below is they are a value retailer. So to some extent, they could actually benefit if folks are being more judicious in terms of where they're spending, because they're still significantly lower price, even with the price increases relative to a lot of their competitors.
Okay. Anthony Chukumba of Loop Capital. Great to speak with you. Thank you.